And of course, as these types of wildfires continue to threaten homes, fire risk is at the top of mind around the state this time of year. And if you're one of the hundreds of thousands of homeowners who get your insurance through the state through the California Fair Plan, well, you're about to start paying even more. The state announcing an average rate hike of almost 30% for those already paying the highest rates. But as John Ramos reports, it may actually be good news for the state's insurance market.
This is the town of Orinda. About 2 years ago, when State Farm began shedding policies in California, this was the hardest hit place in the state. More than 1,700 policies were non-renewed, and most of those people got kicked to the California Fair Plan. And now they're about to get some bad news. The announcement came today. Effective October 15th, all Fair Plan policyholders will see a change in their monthly bills. Industry expert Carl Sussman says it was not unexpected.
Which means some people are going to see plus 50, some might see minus 20, and it's going to average out across all policyholders of about 29.1%.
That's going to include a lot of people in Orinda. Local real estate agent Tom Stack says 2 years ago, people trying to buy a home or keep a mortgage were stuck with the Fair Plan.
You know, we're surrounded by open space and trees and all this, so it became a bit of a panic for people, and there were no solutions.
But he says that has changed a bit, and he's starting to see more options for those looking for insurance.
So solutions are popping up. There's a lot of private market options that are available now out there because people are finding a need and filling it.
As the cost of the Fair Plan rises, it provides an incentive for insurance companies to begin writing policies again, albeit at a higher price.
We're going to see the primary carriers back and writing those risks. I'm already starting to see it now. But I think in general, as homeowners, we have to accept that, unfortunately, we were paying. We were down at the 5th or 6th least expensive state in the country for property insurance, which is kind of wacky when you think about it, since we're the ones that have the fires and the earthquakes and all sorts of other bizarre weather events. That's not going to get easier. That's just going to get tougher.
The new rules will allow insurers to charge based on actual risk, which means homes in a forested place like Orinda will likely pay more. But homeowners can reduce that amount by home hardening measures. Alfonso Patting with the Natural Resources Defense Council says that's where the state can play an important role.
The insurers have no incentive, essentially, to help homes mitigate the hazards. So what that comes back to is, what can the state do about that, right? The state needs to have programs that help incentivize and help subsidize these hazard mitigation measures and home hardening measures. So that's what needs to be done, especially in areas that are in danger.
Which means the Fair Plan could once again become what it was intended to be, the insurer of last resort for those who cannot lessen the risk. And even a place like Orinda can once again have some options, even if they won't be as cheap as they once were.
Some of the big players are trying to find a way to get back in again. They're redoing their underwriting, they're seeing what's where, what's happening. They're trying to find a way to get a piece of that market. Because when you mentioned 1,700 homes are being struck from the rolls, well, who's going to handle those 1,700 homes? Ingenuitive companies are going to come up with solutions.
So that was John Ramos reporting from the East Bay. So the Fair Plan was asking for a 30% increase to cover the cost of its growing risk exposure. Sussman says several large companies have already filed to be part of the market, and he expects people will leave the Fair Plan as private insurers do come back to the state, and he expects that to begin happening in the next few months.